QE feeding Europe house price bubbles, says study. The European Central Bank's quantitative easing program risks fueling house price bubbles in several countries, according to new research, as investors pour cash into real estate. So Moody's, in particular, warned about Germany, Norway, and the UK. Property prices in Norway since 2010 have risen by 30%, 25% in Germany, and 15% in the UK. And about the UK in particular, they note Osborne's policies. They say Moody's Analytics said that the loan standards in Britain are still relatively loose, primarily because of the government's Help to Buy scheme, which subsidizes purchases. In particular, the number of mortgages with high loan-to-value ratios has risen sharply since the program was introduced in 2013.
Right, and the most successful economy in Europe, Germany, the house prices go down.
Well, they note that they've risen by 25%. The government itself tries to dissuade it, and they're not happy with this at all, unlike George Osborne, who wants this and seeks this and does everything to achieve this. What has happened in Germany is capital flight from Italy, from Greece, from Spain, everybody thinking that the euro is going to collapse, and what they want is have to Deutschmark should the euro collapse, which is why people are pouring money into Germany. It is not government policy, which is why they note in particular in the UK, it is government policy. It is the Help to Buy scheme, the Help to Lend scheme that was supposed to go to small businesses, and instead it went almost entirely to property lending. And now the Right to Buy scheme that they want to extend to private property, seize the private property, hand it to speculators, and that is being pushed back by the House of Lords at the moment.
Right, so Germany is seeing this rise in house price as a problem.
A disaster,
yeah,
yes.
Disaster, not as a cause to celebrate.
No, because of course they don't want people to live like rentiers. They want people to create value and wealth for the economy.
Yeah, they want workers
yeah.
that go into the factory and get huge wages and huge pension benefits and great health benefits. And all those programs are in surplus in Germany. They don't want rentier, Ponzi scheme, maniacs.
Well, speaking of Ponzi schemes, part of it is here we have the policy of pushing those who are least able to afford it onto the property market now, okay? So all the land is already owned by this massive rentier class. If you look at the Sunday Times list of the richest people in Britain, a lot of them, the British people, i.e. not the ones that are actually oligarchs from overseas, they're actually property developers in the most part. And here's a headline, remarkable headline from this past week. Property fund leaves investors with 2-year wait to get money back. A property fund run by insurance giant Aviva has suspended dealing after losing 2 of its biggest investors. Savers left in the fund, called Aviva Asia Pacific Property, now face a wait of 2 years or longer to get their money back. So these 2 huge whale investors basically represented 75% of the assets of this Aviva fund. Anybody else who followed these whales into this fund, and anybody else who follows the whales into the stock markets or the property markets or the bond markets, well, they're the ones that get left behind. They're the ones that are not allowed to exit for a year, 2 years, 3 years.
Yeah, it's like the Jamie Dimon and MF Global. Remember, they got their money out before anyone else.
Yes.
Completely illegal.
Yes.
And this, of course, is illegal, as you just described it. I was at an event last night, a political event here in London, talking about exactly what we talk about all the time on the show, and how the property markets are in a bubble and how these economy is unsustainable. And at the end of the event, a young couple comes up to me and says, we only have one question. Should we buy property? So it's in the DNA of British people. You're never going to dissuade them from, like lemmings, running off the cliff into the abyss of a property crash. That's just their destiny is to die this way.
Well, we saw that a few months ago. The biggest property developer across China dumped his entire holdings, all of them. And what happened a few weeks later, the whole market started to crash there. In the UK, in London in particular, here's a headline regarding the property market here, which is supposed to be like total safe haven, safe deposit box, all that stuff. And if you vote Tories, prices will continue to rise. Well, highest London house prices dip. Kensington and Chelsea, Camden and Richmond fall as bottom end gets boost from first-time buyers. So some of the capital's most expensive residential areas saw house prices drop sharply this month, according to data released today, with high demand supporting the lower end of the market. In Kensington and Chelsea, London's most expensive borough to buy in, prices dropped by 7.2% from June to July, according to Rightmove. And in the poorer areas, some of the poorest sections of London, well, relative to the rest of London anyway. Prices in Greenwich and Lambeth, for example, shot up 7.9% and 7.8%, respectively. So people are the first-time buyers, helped by and facilitated by the government, are being driven into the corral, into which all the top end is exiting.
Yeah, it could be the beginning now of the major bear market in London property. I remember in 1990, you had a pretty severe dip in London property. People were quite annoyed. During the 2008 crisis, retail in London came to a standstill. There was a huge crisis. All these have been met with massive money printing. But that only works if everybody is able to support everyone else's money printing. So it's a game of musical chairs. When the music stops, as Chuck Prince famously said before Citibank blew up in 2008, as long as the music keeps going, I'll keep dancing. Well, okay, the music is playing, but we hear now that in the top end of the London property market, there's indications that maybe we're at that point in history and financial history where you have a bear market. This is what happens. And so all the collateral value that these properties represent are diminished, and you have a cascading effect and a compounding effect and a chain reaction. And I would imagine the fact that China is contracting and Australia is contracting and Canada is contracting, and all these economies are now in collapse along with the commodities index, is going to make its way into this high-end London property. It's just as night follows day, as Pluto orbits around the solar system, as boy meets girl, as as it's just the way it is. I mean, but when it does fall, as predictably as it will, somebody will take the blame. It'll probably be me, and I'm waiting. I'm ready for it. We got to go.
Buy high, sell low.